Welcome to Spidell's Federal Tax Minute. I'm your host, Catherine Zidane. This week we're covering the new personal exemption for seniors under the One Big Beautiful Bill Act. We'll be covering the provisions of the Act in detail at Spidell's Federal Tax Update webinar on December 18th and 19th. For more information and to register for this 8-hour course, go to Spidell.com. Taxpayers who are age 65 and older by the end of the taxable year can claim a personal exemption deduction of up to $6,000 for the 2025 through 2028 taxable years if their income falls below specified levels. The $6,000 exemption amount is not adjusted for inflation. One of the president's campaign promises was to end the tax on Social Security benefits, but legislators were unable to include this provision in OBBBA due to the rules related to passing a bill through the reconciliation process, which prohibit changes to Social Security from being enacted through reconciliation. Providing an increased deduction to seniors age 65 and older will help offset some of the taxes paid on a taxpayer's Social Security benefits. Married taxpayers can claim the $6,000 personal exemption deduction for each spouse if they each meet the age 65 test. Married taxpayers can only claim the exemption if they file a joint return. However, taxpayers who are considered unmarried under IRC Section 7703 are not subject to this requirement. This means taxpayers who are legally separated from their spouse under a divorce decree or separate maintenance agreement can claim the $6,000 exemption deduction even if they file separately. In addition, a taxpayer who is living apart with a dependent child is treated as unmarried if the taxpayer files a separate return, the taxpayer pays more than half of the cost of maintaining their household for the tax year, the taxpayer's spouse was not a member of the household during the last 6 months of the taxable year, and the taxpayer's home was the dependent child's principal home for more than 6 months of the year. Given that the taxpayer is required to be 65 years old to qualify for the exemption, it's unlikely that many taxpayers will qualify as unmarried under the IRC Section 7703 provision for married taxpayers with a dependent child. The married filing joint requirement for claiming the exemption for married taxpayers was likely enacted to prevent taxpayers from filing separately and claiming the exemption if their spouse does not have the required Social Security number. The $6,000 exemption deduction begins to phase out by 6% of the amount a taxpayer's modified AGI exceeds $75,000 or $150,000 for married filing joint. This means the deduction would phase out over a $100,000 range for each $6,000 deduction. To claim the senior personal exemption deduction, taxpayers have to provide their Social Security number on the return, and if the taxpayer is married, the spouse's Social Security number as well. Only Social Security numbers that authorize a taxpayer to work can be accepted. Individual tax identification numbers cannot be accepted in place of the Social Security number. Failure to provide a Social Security number is treated as a mathematical error, meaning the standard deficiency procedures would not apply. Stay up to date with new OBBBA guidance with a subscription to Spidell's Federal Tax Letter, a monthly newsletter plus a searchable online archive of back issues that keeps you at the leading edge of the federal tax issues that impact your clients. You can get more details and subscribe at Spidell.com under Publications. That's all for this week. Join us next time for another episode of Spidell's Federal Tax Minute.